Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So today I want to cover off another month, another hump, and you'll see what I mean here in a little bit. But I think it's really important that we step back and look at the big picture around the world, and then we'll focus right in on the USA to wrap up the segment. But the main reason I want to do this is we're 3 months into the Russia-Ukraine situation, and the market can do very strange things for a short period of time, but over time that starts to stretch out. And the reason I think that it's so critical here is I think we're in a bear market rally, so I want to talk a little bit about that. But if the rest of the world starts to shut down, then we're going to have a bigger problem because that's going to affect the S&P 500 companies, which have about 50% of their earnings worldwide. So I want to focus in on those other areas of the world so that we don't get blindsided by that. And I also have a couple of other things to discuss with you. So one of the things I'll present is my SSI, the Schnell Strength Index, and just how it's reacted recently. And then what I want to talk about on top of that, though, is the shorter term picture for the U.S. market and why we're so at risk right here, right now. And so if you're interested in this type of stuff, you can also head over and try the 1 month trial at just $7 at ospreystrategic.org, and it's only $8.60 for a full year. Now, again, a couple of things going on. We just did the monthly conference call, so you can go in and listen to that. And I presented a big theme in the monthly conference call, trying to help people understand kind of where one of the biggest opportunities appears to be for the next 6 months, and just how big it might be. Anyway, so you can find that out over at Osprey Strategic. Again, just try it for 1 month for $7. That'll give you access to the most recent newsletters, the most recent weekly videos, and the conference call, which was recorded on Monday. Okay, let's jump into the charts here. And what I want to show you to start is we're going to get into these global indexes. And the idea being, okay, so this is a monthly chart, and I want to talk a little bit about what the indicators I used on them. Now, it's very clean. I have a PPO indicator, which is like the MACD. And what we want to kind of be cautious about here is we have a small uptrend that is sitting here, and I'm just going to take a line that's roughly parallel with that one. But we want to sit here and we want to make sure that this bounces here, and there's a critical reason. And you can see it on this chart in a very, looks like a few days, but it's actually a whole year. This is the resistance level that's above our heads for the German market, and this moving average here is the 20-month moving average. Everything looks fine on this chart. Now, what should happen on a monthly chart is you should bounce at the 50 on a monthly chart. So much like 2015-16, we went all the way down and we bounced there, and then we rallied back up. But in 08, what happened was we got here and then we stalled. And again, it's this, okay, everything's okay, and then it breaks apart. And you can see back here in 04-05, it went sideways for a while, and then rallied up. So this 50% level on the relative strength index is a really important level. And again, we've got the 20-month moving average here and the on this chart, and which is the center of the Bollinger Band. So you can see the light gray here. And then the idea being, what we want to watch for is how does price respond. So if you were to go around the world and just say how many indexes have a price below their 20-month moving average, when the whole world is below that 20-month moving average, we're in a very precarious situation. So I would just say it's time to really focus on, what was our response to this. And again, the world can just kind of glass over some things for a couple of months, and then all of a sudden it goes whoosh. And we don't know if that's going to happen. Normally, even in the book Reminiscence of a Stock Trader, he talks about trading through one of the wars, and he just said, it's very bullish when you're in the war because everything's in demand. I hear that, and that's the way I want to think about it. But what I'd like to do is just use the charts to kind of give us our background here. So, first of all, the RSI staying above 50 is kind of a critical level on the monthly charts, and then I'll get into the weekly chart in just a second. And then what you see here is that 20-month moving average. That's a pretty important level. And then we want to be aware of support and resistance zones. And then lastly, we want this PPO momentum indicator to start turning up. And I'm recording this on Tuesday night, so before we've got any June data in here. So it's a nice clean cutoff, and it's a great place for us to start. So first of all, for me, for Germany, we have to get back through this support resistance line. If we don't, I think this is really important. And again, staying below the 20-month moving average, you can see it over here on the Zoom panel. If this rolls over and this starts to falter here, we're in a very precarious place. Okay, and Germany's one of Europe's largest economies. It's also a big manufacturing center, so it needs a lot of energy, which is natural gas and diesel and crude oil, jet fuel, all that kind of stuff. If Germany ends up having an energy shortage, solar and wind, if Germany ends up having an energy shortage, that's dramatically going to slow down the economy. And you can just imagine if, as an example, if they had problems with energy, then they would have trouble manufacturing cars. Well, cars worldwide are already in a bit of a shortage. So that would just exacerbate some of the inflation items we're seeing today. Okay, so here's the weekly chart for Germany, and on this chart I've got a full stochastic, which basically is where is price relative to the last 14 weeks. And what you're hoping for is that when you're in a positive area like this where it's always in the top, it will stay up in the top range here. And then when we started to break down, so this, I'll call it this price action in here relative to the prior 3 months, we were at the low end of the range, so it starts to fall down. Well, right now we're surging up, which is very good. I would just say we have this big downtrend line on momentum, and if we can get up through there, that would be very, very positive. If we're going to just get here and roll down, the markets, when momentum was negative but improving, which is below zero and starting to turn up, and then turns negative again, these things can go down very, very quickly. So I'll call it fragile is where we are. And I showed the blue line on that monthly chart for the DAX before, but this is the weekly chart. Same 20 period moving average, but it's the 20 week instead of the 20 month. Anyway, the bottom line is we're below the center of the Bollinger Bands. When we're under this blue line, we're right on it to finish the month. We'll see how this week wraps up, but again, we've got resistance shortly overhead here. And the good news is we broke this downtrend line. I just don't want us to have a false sense of security. The 40-week moving average is just overhead here. So the next couple of weeks are critical. And if you're using charts to help you understand the markets, all of the things I'm trying to point out here are just to show that, we can go for a period of time with everything being kind of okay, but we're at that very important inflection point that if we don't hold up and we start to roll down globally here, the whole world could take a big step lower. And I think what's kind of surprising is the European markets have been rallying for 4 weeks, while the U.S. market's only been rallying for 1. So it seemed odd to me, but again, we're just going to look at the charts and understand what the data is telling us. So in France, the RSI is higher than the 50% level. Price is holding above this 20-period moving average, which is really good, but the PPO momentum indicator has just rolled down. Now, if I go get the SPX, and we're just going to go to that weekly indicator, and what you see here is when your PPO is rolling down on a weekly chart, that's a problem, right? And now what we want to do is go to the monthly. What you see is when we got our cross, where was it? It was in January, and look what happened then. Then the market really started to decline. So when we're looking at this French situation, the PPO is just crossing to end the month of May. So literally, yes, the peak was made a while ago, but now we're just starting to get a momentum signal that we're going lower. So I don't want to put a positive spin on it or anything. I just want to point out that this chart had a trend going here, and obviously it's trying to hold it. Now we could tighten up this trend a little bit. This line goes back to 09 low, and you could just see, I would say it better reflects the trend. So that's a pretty important level. We need to hold 6,000 on the French market going into June. Okay, the weekly chart again rolling over under both the 40-week and the 20-week. Really important for us to get some horsepower kicking up here and getting out of this. Again, we do not want to lose this support level. This was the highs just before COVID hit. So if all of a sudden we start to break lower, June will be very important. And again, a broader picture is that typically the market likes to rally from the fall into the spring, and then May to October tends to be weaker. Let's not get too hung up on that. Let's use the charts to help us. But the big thing is this weekly chart is also hiding under the 50, and we did get a bear market signal. So what is a bear market signal? It's basically that RSI got to 30 on a weekly chart. For me, that's what it is. And then it bounces back up to a 50. It will stay below a 60. And then until that really gets going, that's a problem. When we saw this coming out of COVID, it couldn't get going. So we had a rally and then we stalled in here and it really wasn't there. And then when this started to finally kick up, and this was the vaccine announcements, the market went on a big run. Well, now we're sitting here under 50 and trying to get going. And the critical point that we want to be aware of is that if all of a sudden the market rallies up to these moving averages and then falls away, that's the kind of price action that you see back here in 2007, 2008. Basically, every time we got near the moving averages, as we pushed up against, so you can see over here, the blue is below the green, and every time we pushed up against, we just got stuck, and every rally was kind of defeated by that moving average. So just be aware that when we're in a bear market, we can stay below this 20-week moving average pretty much the whole time. And even here's a bit of a false break. But again, the idea is to just use the charts to give you a clue. And the clue is that we're on the underside of stuff and we're not really in a positive territory. Our PPO is below zero, which is negative. So if this rolls over right here, right now, that's kind of what happened in 08, and then they really fall quick. So again, I don't want to sugarcoat it. I just want to point out that why it's so important that things get going. Now, Sweden is one of the more interesting charts in Europe because it seems to react a little quicker than the rest of Europe does, and it's probably because they have their own krona instead of the euro. But what you see here is it's sitting very close to the bottom Bollinger Band. That was an area of support for the last few years, but our PPO big picture is breaking down, and if it breaks below this line here, that to me that's quite bearish, and we can spend a lot of time trying to get back above it. So Sweden, usually I like to use it as a leading indicator of what's going to happen in Europe. It's still making lower highs and lower lows on the monthly chart, so I don't have any real happiness factor showing up. How's that? Now we have a downtrend line here on the weekly chart, and we're rubbing up against it again. We're below these moving averages. They're in the bear formation, which means the 20-week is below the 40-week, so they're in a more precarious position. PPO momentum is very low, below zero, so if it was to turn up here, that would be helpful after obviously losing momentum for a long period of time. To me, again, I think the early weeks here in June are going to be quite important to see if Europe can actually rally from here or if we just start to break down. So Europe or the UK, and the point I want to make on the UK is just let's go like this. This these previous highs are really it's amazing how well it's held up with the whole Brexit thing going on. Look at this big trend line from '06 to now. And if this rolls over right here, I mean, it's a best fit line. It's not like it's a surgeon's line. If it rolled over right here, this would be problematic. So this would basically say it was testing the prior high and fail, or there's a lot of commodities listed in London or commodities companies listed in London, and they could continue to work higher like the Toronto Stock Exchange has been doing. Okay, I'm not going to cover the small ones like Greece, but if we go to Italy, Mario Draghi became prime minister. So here we have this support and resistance line. Well, guess what's happened? We failed. We got a sell signal on the PPO. RSI is right at 50. Bull markets stay above that. Bear markets get below it. So we're back in this period here, and we're trying to hold above it. That's an uptrend. Well, what we need to see is this thing hold right here, right now. So all of Europe looks crisp to me. If it doesn't hold, we got bigger fish to fry. Okay, so we've got an uphill battle here for the Shanghai. It's sitting right on this big 35-year trend line, and we want to make sure it holds up. Look at our PPO. It's rolling over really hard, monthly chart. If this doesn't turn up quickly, we're going to have a big problem. Now, they're trying to do all kinds of stimulus, and hopefully it works. But we're below 50 on this monthly chart as well. So again, all of this weakness needs to start building a base here. When we get to the weekly chart, it is trying to work its way higher. PPO is below zero, so what we would expect here is it would come up, maybe make a higher low, and then work its way out. Or maybe it could just perhaps get revving up. I think that's harder to imagine that it's going to just kind of keep launching because they keep having COVID problems. Getting everybody back. Okay, the Nikkei, I'm actually going to leave it now because it's got so much government interference. It's just almost not a chart. The Bombay Stock Exchange, you got lower highs and lower lows. We're trying to hold this prior low. We've just got the cross here in May where the 20-week is below the 40-week. PPO momentum is pointed down. But again, all of a sudden, if this starts to turn up here, this is a very bullish formation. Come down near zero, get momentum returning again, and surge to the upside. RSI is below 50, so not a great look. Okay, I'm going to just highlight kind of some of the key themes here. Australia, a commodity country, obviously Russia getting a lot of pressure for its commodities. But the big thing we have is we have a sell signal on the monthly, and we're starting to accelerate lower. This isn't a good thing. And again, I'm a commodity guy. I like commodities, and I still like commodities. But if all of a sudden all these charts start to fail, we just have to figure out how to control our love affair with commodities because they don't usually give us a polite exit. Commodities tend to have a church spire where they basically run up and run straight down, and you just want to avoid kind of getting stuck in the stock market when that's happening or in the commodities market. So we're holding above the 20-month moving average, but we do have momentum rolling over here. This, again, I showed that S&P 500 earlier when that happens on a monthly chart. We're also back kind of below this red trend that we had going on. So this is kind of a place where the market typically tops out. So we really want to see Australia get kicked in the butt and move to the high side here. We don't want them to start rolling lower. Australia, weekly chart again below the 20-month moving averages. So it looks sensitive to me, or 20-week moving average, but we're also at this horizontal support resistance. If this just fails right here, it's really ugly. So we want to make sure, again, the point, what I'm trying to point out here is at the end of June, we really want to know which way this market is going to go. And if all of a sudden all of this starts to vaporize, we got big problems. TSX is sitting bounced off the 20-month moving average, trying to hold this upper area. Just got a sell signal to end the month on the PPO. So again, not a good look like we had on the S&P 500 where we got this sell signal in January. The commodity countries are a little farther behind like Australia and Canada. So let's just pay attention here. If this is going to break lower, It's not going to be great. I'm going to go straight to the S&P 500 now. And this is the monthly chart again. Everything looks good, except what do you see when you get up here? We finished the month below the 20-month moving average. Not a good look. And again, we're on a sell signal for sure on momentum. RSI is still holding above 50, and it's really been there since '09. So if all of a sudden we're going to start to put a little pressure down on the lower side of 50, I think that makes it real awkward for us to kind of expect more out of these markets in the short term. S&P, again, horizontal support line. If all of a sudden the market rallies back up to that level and can't get through, I think we got some real problems. And again, this whole situation is showing up worldwide. So that's why I think June is so important. Okay, here's the Nasdaq weekly. What you see, I mean, it's just been a rain parade here where everything keeps falling. We're trying to get out of this and physically turn higher. We had a nice big price bar to end May, and now what we're looking for this week in June is to continue to go to the high side. So all of this is lining up, and the big question for me, I'm going to take you to a chart that I don't usually share on Market Buzz. It's one that I use with my subscribers. It's one of the things that a lot of people look for from our services at Osprey Strategic. But this is a chart of my strength index, and basically it ran up to the top, and when we got up to this high level, the market got very, very weak and started to fall apart. And then in February, March, really we couldn't have any sort of run up, and we just got stranded in this downtrend. Normally, we like to try and buy the market when it goes above this 25% level. Fine, so we get down here, we finally get a rally. This is 10 or 12% or something. The nice rally we had, all cool. The only problem is we literally got to the top and we rolled over. So then we got to the end of April, and my indexes were bottoming out. And again, as they stay below 25, we don't really want to be involved. But they started to rally in mid-May and gave us some hope or opportunity, pulled back, and have now shot up to the highs. So the real question for all of us here, are we going to see the same thing we saw in March and April where this thing rolls over quite quickly? Or are we going to see what we saw way back at the beginning of COVID, where this thing shoots up and spends a lot of time up at the top area, and that's kind of how we come out of the rally. So watching really, really closely. Now, also, if I just go back to this prior time frame, I've got one more thing I just want to highlight. Why are these little black arrows here? And the reason is because at the beginning of the month of January is when the market topped. The beginning of February, we rallied into it, and then we fell for the entire month. The beginning of March, we tried to rally, but we fell for the first 2 weeks. And then we finally broke the downtrend, so that was kind of important. Got to April, same thing. Got to the beginning of the month and just literally went lower. End of May, we tried to start a rally. You can see my indicators tried to kick up, got here, and fell apart again. So all of these things are around month end, and if we're going to start drying up again here on month end, all of us need to be ready for that. So again, I'm a little more optimistic. This was a pretty good surge after a long week period where almost 3 weeks or 4 weeks where we were down below my 25% level. So getting back up here and getting going is important. Normally what bear markets do is they try to attract you back in and then fail. So we've got that resistance level just overhead on the S&P 500. Again, it lines up with kind of the bottom of this last year. And if we can't get through that, we're probably going lower. And I would be surprised by that. But nothing should surprise us. We're in a very difficult situation here where the Fed is trying to tighten monetary policy, and yet we've got supply constraints all over, creating a lot of inflation. So with that, again, let's go back. The big picture review worldwide just says we're at the sensitive part of the chart where everything is below the 20-month and the 20-week moving average. If we can't get back above, we really, really, really need to understand that this is a negative signal that we typically only see in a big bear market. And if we're not going to walk our way out of that, we need to, if the market doesn't have the strength to get out of here right now, we need to back off and take a very passive look at the markets and let somebody else take the losses while the summer comes at us. So thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. If there's any interest for you over at Osprey Strategic, we'd like to welcome you there. Just ospreystrategic.org. Thanks, everybody. Have a good week. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.